Good afternoon, ladies and gentlemen. My name is Gilbert. Welcome back to my channel. Today I'll be giving out a simple video, just at least a rewarding strategy that can give you up to a risk reward of 1:3 or 1:2. Depends on your patience. You can also use this same strategy on a higher time frame, like the 4 hour or daily. And once you see the signal for it, you take it and leave it. Okay, before we go right into the strategy, if this is your first time of viewing my video, please subscribe to my channel. Also, click the like button, give positive comments. Now, when you do these things, it encourages us to do more. It encourages me too. Just seeing a like or any video I make, it encourages me. Any strategy I see that is profitable, I share with you guys. So now let's go on to today's strategy. We'll be using just the 50 moving average. 50. Now it can be used on both boom and crash, the indices too, and the currency trading. So let's see. The parameters for the moving average is 50, shift 0. Method will be smoothed. Method will be smoothed. Apply to close. Then the pixel of your choice and pick any color of your choice. When you've done that, you click OK. Ta-da! Now, this looks funny, right? What will I be using 50 moving average? Just 50. 50 alone. Is it not a waste of time? I'm going to blow my account, right? Anyway, that's just funny stuff. The 50 moving average, what we'll be looking for is a breakout and a retest. When I say breakout and retest, you can see this place. It broke out here, came back to retest, and boom. Now that's not the strategy. You look for a clear breakout and an engulfing candlestick. You look for a clear breakout and engulfing candlestick. Now let's use this as a perfect example. The market was in a downtrend. It went up, it broke out, came to retest, and never went back to the top. Now, that means it broke out to the sell side. Then it bought at this green candle here. And this green candle was engulfed by this candle. That means you enter at this point. You enter at this point. 18073. You put your stop loss above this point, which is what? 1825, about 20 pips stop loss. So we are looking for a risk reward of 1:3. So we can get 60 pips. Now calculate 60 pips out of this. We're talking about 17. Let's see. 18073 minus 60 pips. Let's do little calculation. 18073 minus 17473. Did it get up to that point? 17473. Wow. Wow, did you see that? 17473. That's like a risk reward of 1:3 on just this single trade. And you risked what? 20 pips. Now, if you are not the type that has patience, at least you can wait for 1 hour, 1:2 risk reward. That is, if you're risking $10, you're willing to make 20. You understand? You risk 10, you make 20. Now look at this retest here on this moving average. At this point, it was engulfed. It was engulfed. And the price went up. You can put your stop loss below the moving average. After putting it below the moving average, you calculate your risk parameter of 1:3 risk reward, or 1:2. Just looking at this alone, you know that it actually got to that risk. Let's see. Let me not say much. You entered at this point and you're buying 18029. Stop loss 17988. 18029 to 17988. It's as little as 4 pips. Wow. This is it. 17988. You enter at this point. Calculate your risk parameters. Let's see another one. Wow. This is a good one here. Look at it. It broke out at this point, came back to retest, and was engulfed by this candle. So this will be your entry. You calculate the risk parameter. If this place is 20 pips, you are aiming for 60 pips or 40 pips. You understand? Let's see if there's any cross again. Okay. Now, at this point, there was a breakout. Yes. It went back to retest into the moving average and was engulfed by this long white candle at this point. So this is our entry and this will be our stop loss. But my advice to you is, if the breakout candle is too long, if it's too big, you can leave it. But if you can move your stop loss to break even once the price is in your favor, it will be better. So that if it goes down, you have nothing to lose. Then you can start trailing your stop loss if you have the grace to wait. Let's go to another pair. Let's use the GBP USD. I think a trade setup is coming up here on GBP USD. Yes, I'm seeing a trade setup here. The price has broken here. Wait for it to retest and get engulfed by another candle. Once the engulfing candle closes, you enter what? Immediately. You enter immediately and put your stop loss above the candle that was engulfed. Let's go. Let's go, let's go, let's go. Let's see what's happening. Okay. This was breakout, came to retest and was engulfed by this. Yes. You put your stop loss here. Boom. Sorry. Stop loss was hit at this point. You won't make it all the time. And mind you, you might not even be awake at this time. Except you want to trade the Asian session. I know it's very slow. So let's say you missed this trade. Let's go over to another one. There was a breakout here. It came back to retest and there was no engulfing. And there was also a breakout, so there was no engulfing. This place is void. Whoa, this is a very good setup. Look at the breakout, came to retest, and this candle engulfed this one, and boom, look at the move. Hello friends, this is just the simple strategy. We are not using much indicators, just the 50 SMA, smooth head, moving average. And just by this one, you know how much you'll be making from the market. So if you like this video, please subscribe to my channel. Share with your friends. Okay, before I close, let me see if it will work for the indices pair. Let's see. I love v75. Let's see. Whoa. Now, there was a breakout here at this point. It went to retest, and it was engulfed by this candle, and I missed the entry. So it went back to this point again and was playing around. Then this happened. At this point, there was a buy candle that was engulfed by this particular candle. And I took the trade here because I already saw it in the 5 minutes time frame. Here. So there I took the trade. And boom. Let me close this one. Let me show you what I made today with just this strategy on a 1 minute time frame for volatility indices v75 and the v10s. Let's go to v75 and see what the chart is saying there. Wow, it has not crossed, but let's see this one. Okay, look at this point here. It came back to retest this point. It was engulfed by this candle. Just imagine you entered at this point. You entered here. Boom. You calculate your stop loss and your take profit. Let's see. Let me use trend line tool to do that. So if you are risking this much from this point, 1, 2. Whoa. Almost at TP, then it went back. This is wonderful. Like I told you, the volatility indices, they are not like the currency pair we trade. Look at this one. This was a fake out and would have failed at this point. It broke out and was engulfed by... Okay, it's not a fake out. See this one here. It was engulfed by this one here. If you had entered at this point, you would have actually hit stop loss here, which is at this point. But there's also another opportunity here. It was engulfed here. You put your stop loss here, enter at this point, and boom. Can you imagine? Now let's see again. Let's say this is our entry point. Good. You entered 1. That's TP1. 2. 3. Wow. Awesome. If you love this video, share with your friends. Volatility indices, currency pair trading, boom and crash. You can use this same strategy. But mind you, risk management is key in anything you're doing. Volatility indices, they are not here to play with you. They are here to take your money. If you have small accounts, please manage your risks. Don't go and open a 0.01 loss and you have $50 account. Your account will go if anything happens. So, thank you very much for watching. I remain your friend, Gilbert. See you in my next video.